Hi, everyone. So today is September the 12th, and I wanted to do the continuation of my bidding for the property at 742 East 10th Street. I got a email this morning at 7 a.m. stating that I am the winning bid for the property. So let's go back in it. Um, I think I ended the last video. I wasn't sure because it did show that there was still a 5,000 increment, and I didn't see if the reserve was met, but then later on, after I ended the video, it said reserve met. And so if you see here, let me click on this one. Now it's in pending, and my numbers were 127,050. So that was what the sheriff's deed was, even though the FHA loan amount that this previous owner took out was 143,000. So I was worried that they may want 143,000, but the bank did go for 130,000. And it's this high because the increments were in $5,000 dollars and not like 1,000 or 500. So what I'm going to try to do now is see if they'll offer me closing costs, and I'll ask for like 2,500, and it'll bring me back down to 127, and that should still be okay. But right now, they sent me an email. So 5 a.m. time was probably Central Standard Time. So I got an email at 7 a.m. Okay, that said I won the bid. So they were exact. They didn't extend this. They didn't ask me to go higher. So I I have like they said the end of the business day to sign the contract, or not sign the contract, to complete the contract information form. And this is where you can bid on other people's behalf. So that when I fill it out, I need to put the name of who's going to hold title so that they will generate a purchase agreement to send to me to sign. And then I'm going to get in it and just show you how to start the form. But I'm not going to complete this because right now I have someone I was going to partner with because I found I'm looking for private money lenders. And so one of my clients that I went to, they did what I did, which was went and got $120,000 from credit cards and liquidated them at 0% for this very reason, to buy properties with. Okay, this is what I did. Um, Now that I've done this a couple of times already, I found a DSCR lender that it's actually Kiavi. Okay, I'm going to throw it out there. They do bridge loans and will do 10% down. Points are high, but I'm going to call them later this morning to see if, I think when I got a quote, they were charging 2.75. And if you go to a broker, since the broker needs to make some money, the broker charged another 2 points on top of that. And it's a bridge loan for 12 months or less. I have good credit. I've got 5 years, not 5 years, five um, proven experience of flipping. So if you flip, that's considered one uh, property. But if you buy it as a bridge and then you refinance it in a DSCR, that's considered another deal. So they consider that two. So they give you a better rate. Okay. So right now, I'm going to give you the scores. The FICO score is like 790 with, I think they gave me credit for like 4 flips done. And the bridge loan interest rate is like 10.99%. Okay. And I have to pay monthly on it until I rehab. Um, the broker I used didn't make the correction on the term sheet they gave me, but you also need to be at 100,000 minimum purchase price. I do have a different lender that will go below 100,000. Okay, they're not that bad either, but that would require a 20% down. So overall, the way you look at this sometimes is yes, you pay more money up front. So I don't care how much points I get charged, so long as the numbers work out. So if I have to put 10% down and I'm paying 4.75%, actually it was 4.75% points, and then I still had like the processing fee, underwriting fee. It was still high, but if you take that number and you compare it to the difference of another 10% down, whichever one is lower, I'll go with that. Do you see what I'm saying? So, because at the end of the day, it's what are you bringing into closing with to buy this property. So even though the points and the originations are higher, it was still less than putting down an additional 10%. Um, my other lender that I had been using actually gave me 15% down. Okay, he said I qualify for 15 and not 20. So I got to go back and do the comparison, but that's kind of how you look at this because you do have to have some money, but I plan to, after I rehab this property, I have to refinance it, pull the money out that I put as a down payment and the rehab, get my money back out. So whether I flip it or I keep it as a rental, I should be able to get all my money back out. So that takes anywhere from, 3 to 4 months. And so another thing to keep in mind is that when you are buying and to hold, a lot of these lenders, some lenders will use short-term rentals income and give you, whatever the value is. But some lenders, they say, oh, since you don't have a history of rentals, we kind of have to give you the market rent. And sometimes that just kills your deal. It does and it doesn't, only because we're buying it at a discount of 30%. And then whatever your mortgage comes out to, because remember, DSCR loans is like they want to have 1.25%. So let's say this is a 4 bedroom, 2 bath house. I can get $1,600 on it for rent. Your mortgage needs to be, you know, how do I figure this out? Like I said, I'm not that great at math. So if I can get 1,600 in rent, the ratio needs to be 1.25. So if my mortgage is $1,100 PITI, and when I refinance to a 30-year, I can get a 7% fixed interest rate. Okay. And I think I would be able to do it. Here, the issue when I came upon the last time I did this, my mortgage was about 900, and then the rent was 900. Okay, they were like, no, we can't do this deal. And then I had a lease agreement for like $1,600 already in hand, but that particular lender would not accept it. And what screwed up was that the property taxes came back, even though it was the next year's taxes wasn't going to come out until February of 2025. And when I called the county to ask for what the new taxes was, because it went from a primary residence to an investment, the tax, the millage, whatever, was going to be a little bit higher. And they told me no matter what, the taxes were $800, it was going to at least double to 1,600. But somehow the lender came back and said, well, your taxes now are $2,700. So it increased dramatically. And then the lender came back saying, no, sorry, we can only give you a 65% LTV cash out. And I needed at the time 75% cash out so I can pay my contractor and then pull all my money back out. It ended up being they gave me 70%. Okay. So I had to fight tooth and nail to get that 5%. And it was because of the property taxes. Okay. So All these little nuances, and different lenders do different things. So sometimes you have to pull your deal and go somewhere else and stuff like that. So I just wanted to make you aware, lots of little things. So, anyways, I'm hoping this property, my guy said it might be, they think it's worth 195. I pulled comps. I didn't see it, but then again, there's not very many properties listed. I should take it back. When I was doing my comps, it was for a 3 bedroom, 2 bath house. I've got a 4 bedroom, 2 bath house. And some of these appraisers will go farther out to find something to get the value. I'm not looking to sell, but again, I still need that higher appraised value so that I can get 75% LTV, because a lot of these lenders these days, they're not doing 80% LTV anymore. They're going to 75. Like my deals were, I got, instead of getting 80, I never got 80% cash out. I got a 75%. Then it dropped down to 70%. Okay, so no, that's why I'm working with these numbers. Um, but I want to refinance and pull all my money back out because I need money for furniture. I'm going to make this a midterm rental. There's a huge need for, my guy told me that this is Mount Vernon, and there's some contractors that need housing because there's some industrial, I don't know, whatever work, and they've got to go into the next city over, and they're renting, like these workers are renting a house together, and one of his other clients had a 6 bedroom house. She's renting it out for $5,000 and her mortgage is 1,800. Okay. And they're willing to do it and they're driving over to the city, Mount Vernon. I'm buying a property inside Mount Vernon right now and I can rent it out to these guys. Let's say, I think my mortgage would probably somewhere, about 12 to $1,300 at this purchase price. So I'm buying this for 130. So yeah, that's kind of why I'm keeping this as a midterm rental. And over time, you know, this house sold for 100 and probably 45,000 back in 2020. So I'm still buying it below, and the next few years, it's going to appreciate because this is still affordable housing. This is why I'm kind of going with this. And I bought it at a discount. It's worth about 180 to 195. Okay. So this is the strategy. And then my guy said, hey, there's a pool back there. If I can get it up and running, it's a plus. Okay. This house is vacant. And I want to also put out there that sometimes I'm able to get inside the property, but a lot of these, as is with no listing agent, you close escrow and that's it. You close escrow. They don't even notify you who to meet, how to get a key. So technically, you're supposed to go and rekey your own house to get in. That's happened to me so far on, actually, I know the code, so I was able to get into the property, but I'm just telling you, this is kind of how it is. So I'm gonna contact them and ask today, hey, is there, can I get in to see the property? And sometimes they'll be like, no. So you have to rekey it later. Let's go. I'm gonna show you what they want to start the phone. Okay. Your time to submit this online form has expired. Yeah, whatever. So I already have an account with them with auction.com. So this is the contact information. And this is who is taking the property, okay? I cannot fill this out right now because I'm going to get with my partner. He's the one who's going to be bringing in the money. I asked him if he wanted to just be my private money lender or does he want to buy and hold, okay? So what we're trying to do right now is these credit cards have 0% interest. Some is 12 months, some maybe 18 months. And the one I got for the longest duration was 21 months. Okay, so you got to keep track of these cards. You can only liquidate or do balance transfers like 3 months. So you have to watch it, but you're always able to use the credit card to buy and get a 0% interest rate. So he liquidated some of the funds, but then he can also use the credit card to pay the contractors to do the rehab and use and get the 0% and then not have to pay the balance transfer fees. In my other video, I can't remember, I can teach you how to use a website called Plastique, okay? And they allow you to pay your vendors and stuff like that using the credit card, but those do have a fee. I think it's about 2.9%. I've done this where I'll pay the contractor and I'll tell him to ACH me back the money and then I get it in cash. Okay, so that's another way how I did this to get cash. So I'm not going to proceed with this because I need to speak to him. We need to go and literally I will form an LLC online. It'll be Wyoming. Come back. Wyoming will, it's like it takes a day to give you your articles of organization. Sometimes it's immediate if you could do it early in the morning. Okay, you'll get it. You put in the name or go search the name right now, see if it's taken. If it hasn't been taken yet, fill it out with that name. And then go and do the actual LLC formation. Okay, so I used to do it ahead of time, but you can do it the same day. Okay, that's why they say Wyoming is great. It's immediate. So that's pretty much it. That's how then they're going to generate a purchase contract. Then you're going to have to send in um, your EMD. Remember to go with the seller's escrow and title company because then they will cover for a portion, like they'll pay for your title insurance. If you select, there is no reason why you guys need to select your own title and escrow company. These guys are slow, but again, it comes down to money. Okay, you don't want to spend any more extra money than you do. I have contacts from my title and escrow, but I still go use the sellers. But sometimes it happens to be that auction.com, usually it's Zome.com, that works with my villa title and villa escrow. It just happens to be that way because my company does bank-owned auction properties as well. Many of them just do only the second chance foreclosures, and I've made friends with these escrow officers and stuff because then I'll go to them and ask them, hey, do you have this? Do you have the loan number? Because that loan number, the last 4 digits will be able to get you into the property if there's a combo lock on there. It really sucks because you can't go and view a property you're about to buy, so you can only do your best. And this is why I was saying this is the give and take. Because if you're buying it for 30% discounted, they're selling it to you as is. And it is no different from when people were, well, no, when people were buying it during the COVID, they were waiving all their inspections and stuff like that. So meaning they just can't go back to the seller to ask for repairs, but you still have a right to cancel. You still have a right to have an inspection. And what you find on that inspection, let me think about this. Can you back out? It just really depends on what you put on your contingency. Okay. But I found that the auction platforms and these banks, they're really not there to try to keep your money or anything like that. If you don't want to buy it, you can cancel it. I have, and I've been a listing agent on these properties, and the bank does give you your money back for the EMD, but it just depends on how far you go. Like I've had extensions a couple of times and they'll let me do it. And then finally, like on the fourth extension, the next addendum, the asset manager put on there, okay, we will extend this for you, but you are waiving your EMD. And you have to agree to that. But that was like on the fourth extension that they finally put in that verbiage. Okay. So they're not there to take your money. They want to close too, but keep in mind these asset managers who are working on these properties have like, when I talk to them, they're always telling me like, oh, I got 160 files on my desk. They just want it out of there. And then they got to go and talk to the investor who owns this property, so then you're dealing with the asset manager who's a middleman, and then they go and talk to the investor, and then they'll be like, okay, we need this amount. We got to go back to the MI mortgage insurance company and see if we can sell it. That's on a property that's not FHA, but here HUD controls and tells them how much they have to sell the property for because it is insured by HUD. Okay, so maybe another video I'll do is about financing and stuff like that, but just know this does say cash only, but I'm coming in with a hard money lender who still, okay, here's the other issue. Some of the lenders require an appraisal and they have to go in. Kiavi, well, you know what? We think there's a virtual, so meaning you can walk in, upload photos and stuff, but you still got to get in. So there's workarounds for that. So just know not every lender is the same and you must shop around. But if you're a brand new investor, you're going to pay a higher interest rate and more fees up front because you lack the experience. And that's what they're looking for. At least in the last 24 months, they want you, some say 3 flips, some say 5. Okay, so just warning you, but it's okay because you're going to make money no matter what. That is the whole point. So when I say I don't lose money, sometimes instead of making 40,000, I'm going to make 30,000. The lowest I've made was 20,000, but I had 3 partners, and I'm sorry, I was, including me, was 3 partners, and then we divided it 3 ways, and I made 9 grand. We each made 9 grand. Wait, sorry, my math is, we made 6,900. And it's okay because that deal, I was getting to know my partners, I was getting to know the contractors, and I just really was getting to know what the heck and how you do it. Okay. So now I will only have 2 partners. And if I bring someone in and they're a private money partner, I'll do a 60-40. I will not give them 50% anymore because I do all the work and I still bring in money. So this one, I think I'm having him bring in the money. I'm still going to do, maybe I will do 50-50 if he brings in the money. There's a lot of things that goes on because I made all the contact and I brought him this deal. I even brought him the money or how to go get it. So, and then we're going to write a joint. If we're forming an LLC together, it will be in an operating agreement. But if you're not forming an LLC with someone else, then you have a joint venture agreement. And some of these title or escrow company, they will use your joint venture agreement and split the proceeds at close of escrow. Okay, so they will do that as well. So your joint venture agreement is very, very important if you are not going to be on title. So yeah, if you guys have any questions, my information is below. You can reach out and contact me. I will update you guys on this property moving forward so you can kind of see how things are done.